Good morning, ladies and gentlemen, and welcome to the PHYSIOMICS Final Results Investor Presentation. Throughout the presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question in the box beneath and press send. If you are accessing this via a mobile device, the question box will be underneath the presentation. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. I'd now like to hand over to Jim Millen, CEO of PHYSIOMICS. Good afternoon. Good morning, sir.
Thank you, Mark. Yes, my name is Dr. Jim Millen. I'm CEO of PHYSIOMICS, and I'm going to spend about 20 minutes giving you a short presentation, which hopefully you can all see. And then we'll spend a little bit of time answering some of the questions that we've received and some others that will probably come in over the course of the next half an hour or so. So just to remind everyone, I assume that many of you are investors in the company, but there may be some people out there who are less familiar with us. So PHYSIOMICS is essentially a scientific consultancy focused on cancer. So our key areas of competency are understanding the biology of cancer, understanding quantitative pharmacology, that's how much drug you give someone, what effect it has, where it ends up in their body. Thirdly, the ability to understand where data comes from. So where is the useful data that can help give us the insights that we can then pass on to clients. And then fourthly and finally, understanding how to manipulate that data in smart ways to actually drive those insights. In terms of the company's current business model, it's mainly fee for service. And on the left-hand side of this slide here, you'll see, a short reflection of all of the activities that give us commercial revenue. So all of our fee-paying clients are represented on the left-hand side here through projects that we do with companies of varying sizes, from small startups right through to major pharmaceutical companies. And I have a slide. I think the next slide sets out some of the companies that we've worked with both now and historically. What we do for clients rather depends on their size. So for the smaller clients, we can provide a kind of a soup to nuts outsourced quantitative pharmacology function. That could involve identifying data, visualizing data and interpreting data, as well as modeling out that data in order to give useful insights. Importantly, we have an in-house technology platform that we call Virtual Tumor. This is a computer-based model of cancer that we can use to try and predict the response of various different types of cancer to various interventions, usually combinations of drugs. On the other hand, on the other side of this slide here, we've got some other activities that are more R&D driven activities in the personalized oncology space. So these activities have been funded entirely through non-dilutional grants so far. So we've had a couple of grants from Innovate UK and one this year from NIHR, and I'll talk a little bit more about that later on. But this activity is directed at developing software tools to help doctors make smarter decisions about how much drug to give to patients in order to optimize the outcome of their cancer. In terms of the companies that we're working with currently and those that we've worked with historically, you can see some examples here. On the top, big pharma companies. Current clients include the German Merck. That's the Merck Serono, used to be called Merck Serono, based in Darmstadt. And then recently, we were very pleased to announce the addition of Astellas Pharma Inc. As a further large pharmaceutical client. In addition, however, we have a number of undisclosed clients, and we have clients that are more small to medium-sized biotechs. Examples in the latter category include Cellcentric, which is an up-and-coming UK-based company developing a first-in-class prostate cancer drug. And then Bicycle Therapeutics, perhaps more in the mid-size space, is a UK and now US also based company that I believe floated on NASDAQ last year, and with whom we now have a pretty deep relationship, deep and ongoing. In addition to these commercial clients, we also do quite a bit of grant-funded and academic collaboration work. Although we're working remotely at the moment due to COVID, normally our offices are on the outskirts of Oxford, and we maintain very close links with the university and the hospital there, and in particular with their oncology research departments. The sorts of questions that we're helping clients typically to answer are these, or these are amongst those questions at least. So as I'm sure you all appreciate, the challenge with cancer drugs is that they can cure, but they also have nasty side effects. And finding the right balance of efficacy and toxicity is one of the key challenges for most companies that are developing drugs in this therapy area. And one of the primary uses of the modeling and of the consultancy that we do is to help advise companies, where their therapeutic window is. So how much drug to give, how often, which drug and for which condition, in order to optimize that balance of efficacy and toxicity. I won't read all of these bullets out, but you can see that there's a variety of activities that we support clients with. I guess one point I would like to make in particular is that we're doing a lot more work in the translational space and in the clinical space than we were a couple of years ago. What do I mean by that? So as most of you appreciate, I'm sure, when drugs are developed, they start off in a research phase. They move on to preclinical experiments, usually in mice or rats. And then once they're proven to be safe and effective in animals, then you move on to human beings. And that jump from animals to humans is called the translational step. And that is fraught with challenges and difficulties. And one of the ways in which we can genuinely add value and support clients is in helping them to take that step as safely and effectively as possible. So coming on to the highlights of the numbers that were released just last week. I won't spend too long on these. You've all seen them already. I'm sure you've all had a chance to digest them. I'll just pick off some of the highlights here. So total income top line increased 7% to just over 840,000. That is our highest ever revenue as a company, of which I'm obviously very proud. Our losses further narrowed to just over £60,000 post-tax, including R&D tax credits. And obviously, our goal for the next financial year is to turn that around and be break even and profitable, whilst at the same time not wanting to scrimp on making appropriate value generating investments. As you also know, we concluded a very successful placing in May of this year. It was significantly oversubscribed, actually, and we raised just under £830,000 gross at an issue price of 3.5p per share. Just to remind you all what we said we would do with that money, one thing was to further invest in our personalised medicine initiative. The second thing was to expand the team to cope with the higher workload that we're currently experiencing and that we anticipate going forwards. And the third thing was to increase our marketing effort, which is primarily through collaboration with external third-party marketing agencies at this point, in order to generate more leads and to build out our pipeline. And again, I'll be talking a little bit more about that presently. At the end of the year, the surplus of shareholders' funds was over £1.3 million. Obviously as a result of the placing and of careful cash management over the course of the year. Operational highlights. We have a long-standing agreement with Merck KGaA, which we first announced, I think, in December 2017. We're now in our third or fourth year of that even, and that continues very successfully, I'm pleased to say. In addition, we've grown our pipeline, but not only grown our pipeline of clients, but also got a lot of repeat business. So I think we're now on our fifth project, for example, with Bicycle Therapeutics, who are fast becoming a really important client of ours. But most of the clients that we've taken on in the last couple of years have come back to us for repeat business, which is fantastic. I mentioned that in March we were awarded an Ihr Grant, that's National Institute of Health Research, to further fund activities connected with our personalised dosing tool, with our personalised medicine initiative. And again, I'll speak a little bit more about that in a couple of slides' time. I've mentioned the award of the Astellas contract already. We are in ongoing discussion with a number of other service providers around possible collaborations. I won't be able to say a lot more about that at the moment, but that's one of a number of areas that we're exploring where we believe that we can accelerate growth other than by organic growth of the consulting business. And then just finally on this slide, we do now have our strongest ever business development pipeline. As a result of investment in marketing, which started prior to the placing in May. So, we started making a higher investment in marketing in 2019, continued that in Q1 this year, but have now accelerated that further as a result of the financial flexibility that the placing has given us. So here's just a simple visualization of the last 4 financial years. These are basically the years since I took over the stewardship of the company, and the trend is pretty clear. Increasing top line, significantly increasing top line, and declining losses. So just a couple of words, as I promised, about how we're planning to evolve our business model over time. Obviously, we're doing all of the things that you would expect any consultant-based business to do. So we've, as I've mentioned already, increased our marketing spend to generate more leads. We're driving a higher level of repeat business. We're moving our clients up the value chain from early adopters through to champions such as Merck. We're diversifying in terms of the phases of R&D that we work in, and in terms of the geographical location of our clients. So we're doing all of that. You can take that as read. In addition, however, there are a couple of other things that we're exploring in parallel that could take the business, that could help us accelerate the growth in our business. The first of these I've mentioned already, which is a possible collaboration with a broader-based service provider. Obviously, we're very proud, and really it's our unique selling point that we focus exclusively on cancer and exclusively on modeling and quantitative pharmacology. However, we think that there may be an opportunity to apply that expertise in the context of a broader based offering with another company, and so we have a couple of discussions ongoing of that nature. The second thing is whether or not we may possibly be able to license the virtual tumor platform. Again, just to be very clear, at the moment, that technology platform is a tool that we use in-house. It's not something that we sell as a package to clients. What we're selling to clients is consultancy, often using this tool in order to drive insights that are really helpful for them. However, some clients, especially our larger clients, have from time to time expressed interest in potentially, licensing that platform and bringing it in-house so that their own employees can use it, and that's something that we are taking a look at the moment. The final thing, and there've been a lot of questions on this, is whether or not we can do more success-based deals, and of course we're always on the lookout for creative ways to engage with our client base over and beyond simple fee-for-service arrangements. There's a couple of historical examples there, Saran being one, Valorex being the other. I think there are some questions on Valorex, so I'll hold that until a little later on. So again, I promised to say a few words about what we're doing in the personalized oncology space. The drivers for this are clear. Oncology drugs cost, vast amounts of money, especially in the US, where they're 2 or 3 times more expensive than they are even in the UK. There are huge cost pressures in all health systems in the world. And so there's a real drive to want to get more bang for your buck out of the drugs that are being used. Our idea was to create a tool that could help optimize the use of certain forms of chemotherapy in certain cancers. We chose a particular combination, which is docetaxel in prostate cancer, as our sort of proof of concept for the tool. But there is broader applicability of this technology to other drugs and other cancer types. And the idea of this tool is that it helps provide decision support for treating oncologists as to what the right dose of a drug is for individual patients. To date, we've had 2 Innovate UK grants. There's a little typo there that should say 2016 and 2018, I believe. And then we've had the NIHR grant just this year that I mentioned already. So that NIHR grant is being used to fund a clinical trial down in Portsmouth. It's an observational clinical trial designed to gather data, which will be used to further validate and develop the tool. This trial was due to start in the summer. We're now hoping that it will start in Q4 this year. If we can get away with a 1-quarter delay after all of the COVID-related hold-ups that there have been, then we'll consider that a job well done. We will keep the market updated as and when we have more news on that front. And in parallel with that, however, we are having a number of discussions in the US with organizations which already commercialize personalized dosing software. And we're looking to see whether or not there's a possibility that we could accelerate the commercialization of the software platform in the US. We don't know yet whether or not that will be possible. And again, we will update the market as and when we have something definitive to say about that. I will just pause at this point because I don't have a slide dedicated to COVID, but I will just say that for us, COVID has, touch wood, not presented too many challenges so far. So much of our client interaction historically has always been via Zoom, WebEx type calls, so remote interaction. We do not need to travel to client sites in order to do our work. And also many of the employees of PHYSIOMICS have historically worked flexibly to some extent. Therefore, moving to remote working and servicing clients, without seeing them face to face has not been a problem for us. And in fact, I would say almost paradoxically, one benefit of COVID in terms of business development has been that, that people are spending more time at home and less time on planes. So some of the people who I think we would have struggled to get hold of because they were in meetings or traveling around the world are now of necessity more restricted in their movements. And I think that's also, in addition to the marketing effort that I mentioned already, one of the factors that has led to us having a very deep business development pipeline right now. So I think this is my last slide, and it's really just a summary slide. The strategy is a combination of all the things I've mentioned already. So organic growth of the consulting business, getting more business from existing customers, getting existing customers moved up the value chain, and attracting new customers. We're doing all of those things, of course, whilst simultaneously broadening our geographical presence and diversifying our customer base. We're also driving up the value chain from earlier preclinical stage projects to higher value clinical stage projects. And that's an ongoing shift that's really happened over the last 3 or 4 years and will continue. And then finally, in addition to the core business, we're also pushing out in other areas such as immune oncology and personalized medicine. as we think that these have real long-term potential to add value to the business. Fantastic. So I think that is my last slide. Mark, I think we had a few questions.
We did indeed.
And I'm happy to try and address some of those now, plus any that may have come up over the course of the last half an hour or so.
That's brilliant. Thank you very much. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while we take a few moments to review the questions that have come in ahead of the pre-submitted questions as well, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Many thanks for that, Jim. And obviously the pre-submitted questions, if I could start with, and then we'll move on, as you say, to those that come in during the live event. The first question we received was, earlier this year, you mentioned that the prostate cancer decision tool was to be tested at PTTU, and that due to COVID-19, the trial had been suspended. Have the board got a further update on this? If and when the trials start, will the trial still be for the original 12 months?
Yes, so I think I may have covered this to some extent already. The trial wasn't suspended, so that the trial had not yet been approved at the time when the COVID lockdown happened. And in a way, that was beneficial to us because we didn't face the disruption of having to stop a trial and restart it again. What it has meant is that the approval of that trial to start, which was expected to be in the summer, has now been pushed back to Q4 this year. But we are in the very late stages of getting that done. And as and when we have more news on that front, then we will announce it via RNS. So I think that's the answer to that question.
Thank you. Next question. At the time of writing, VAL 201 results have not been released by Valerix. We know that an RNS from 2011 saying that PHYSIOMICS won't receive a fee for the work it carries out, but will instead be handed a percentage of any licensing income from the compound, which is being developed to combat prostate cancer. That decision appears to be a masterstroke now. Does the board expect to do other deals like this, or do they expect a fee for companies using their IP?
Yeah, so I mean, as I think I've made clear, our business is primarily fee for service. But again, as I hope I've made clear, we are continually looking for creative ways to engage with our clients, and they potentially may include value sharing agreements. We have to look at each potential opportunity on a case-by-case basis. So yeah, we're always on the lookout for ways to add more value to the company and to add value for shareholders.
Thank you. In the RNS about Astellas contract, PHYSIOMICS mentioned that a small cap institutional fund had taken some of the raise. Who is the fund, please?
Yes, so I did get asked this question immediately after the placing, and I apologise that we were not able to disclose that at the time, but that fund is Canaccord. So we have now sought their permission to disclose that. So that fund is Canaccord.
That's very kind, thank you. About scalability, a question about scalability. How scalable is the company's business model? I know you've touched on it, but perhaps you could expand a bit further.
Yeah, sure. Well, I mean, I would really just point people back to this slide that I showed earlier, which is from a base of employees that has increased only very slightly over the last 3 years. We've increased revenues by over 3 times. So I think the business is certainly scalable. The question is, which is the optimal way to do that? And again, I think I have covered this, but it will be a combination of traditional methods of increasing the size of consulting businesses, together with any sort of breakout opportunities that we can create through those various other paths that I set out a little bit earlier.
Thank you very much. In the final results on the 30th of September, you mentioned about getting a foothold in Japan due to the Astellas deal. However, as far as I can see, Astellas have not mentioned this deal or PHYSIOMICS in any way. So how can you capitalize on this?
Yes, I mean, it wouldn't be, it's not unusual for very, very large companies not to talk about business they do with small companies. So I wouldn't read anything into that at all, anything negative into that at all. But what I was extremely pleased about was the fact that Astellas were willing to have us, use their name in public soon after having signed the agreement. And just as when we signed the deal with Merck, the first big deal with Merck 3 years ago now, I think that external validation is absolutely critical in helping us to attract and retain new clients. Certainly it helped after the Merck deal. And I think the fact that we're working with Astellas in the field of immuno-oncology will be, a significant asset for us as we continue to expand our marketing effort going forwards.
Thank you very much. Dr. Millen has said that a new blog on precision personalized medicine is due. Are there any timescales for this to be published?
So we will try and get that out before the end of the year, and because of COVID-related events, we've been a little bit distracted. So I'm conscious that we started what was meant to be a series of blogs in Q1 this year, and it has been a little bit on the back burner, but we are still planning to continue that series. Did you have other questions, Mark?
Yep, my apologies. The next question, I guess, is somewhat kind of in line with the scalable question that you asked about the business model, but could you give us some guidance on the potential size of the market opportunity available to you and the industry growth drivers?
Yeah, that's a trickier one to answer. I mean, the size of the market is potentially enormous. The growth drivers are, increase in computing power, increase in understanding of how cancer works, increasing use and recognition of the value of, quote unquote, AI techniques, including things like machine learning that have actually been used for many, many decades and are certainly amongst the tools that we have at our disposal. So, I think we are well positioned at the center of a number of things that are changing in the industry at the moment. Although I won't try and quantify it at this point, I think there's significant potential for growth in what is an enormous market.
That's very kind, thank you. Could you characterize the competitive landscape for us? Where do you stand in relation to companies like Simulations and Schrödinger?
Yeah, so I mean, we are somewhat more specialist in that we focus more or less exclusively on cancer, and we focus more or less exclusively on quantitative pharmacology. So that is both a unique selling point for us, but also I guess means that we're somewhat niche. Now, at the moment, we're taking full advantage of that fact because clients like a company which is focused and which has deep expertise in very specific areas. But one of the ways in which I think we can expand further, as I've mentioned a couple of times during my presentation, is to look at tie-ups with broader-based companies. And so, I can't say which ones, but we are talking to a variety of companies that have a broader base capability in order that we can look to see whether our capabilities would be synergistic with theirs.
Thank you. A question here around the personal dosing tool. Is the strategy now only to use it as a dosing tool for this or other medications stroke indications? The original idea seemed to be more universal than encompassing cancer decision support system. Has there been an evolution of the product strategy?
So the tool has always been focused on the personalization of dosing. It is a decision support tool in that, the idea is ultimately, if it has the appropriate approvals, it could be a computer program that resides on the internet or on a laptop or a tablet, accessible to the doctor at the point when they're making a prescribing decision. And given certain information about individual patients, the tool would provide the doctor with a range of possible outcomes of that prescribing decision that would enable the doctor to be better informed in making that decision. So it's not a tool that tells the doctor what to do. It would be a tool that provides additional information and context for the doctor to help them actually make decisions that will provide hopefully better outcomes for specific individual patients. As to its applicability, I think I already mentioned that although we're starting off with docetaxel in prostate cancer, we do believe that personalized dosing could be extended to other treatments and to other cancers also.
That's great. Thank you very much. You've talked about bringing on a commercial partner for precision dosing, and possibility such a partner being in the US. Given potentially different drivers to the two sides of the business, do you envisage at some point personalized oncology being split off in some way via demerger or JV? That strategy worked exceedingly well in terms of creating shareholder value for the likes of EKF Diagnostics and Renalytix.
I think it's very early to answer a question like that, in any sort of a meaningful way. I guess the answer is, we're always open-minded and we're always exploring ways in which the PHYSIOMICS business model and structure could be evolved to optimize value. But we're very pragmatic people, and we have our sights very firmly fixed on the first step, which is to get people excited about this personalized dosing tool, to generate evidence to support its commercial potential, and then after that, we might think about how best to structure the organization to take advantage of that, but one step at a time.
That's very kind, thank you. I guess a question over engagement here. I welcome your use of the Investor Meet Company platform to communicate with private investors. How is your engagement building with private investors, particularly in this current environment?
With private investors, I'm not quite sure what we mean by private investors here. If I'm absolutely honest, in terms of retail, this will be the first time that we've used Investor Meet Company, and we'll get some feedback hopefully after this presentation. So we'll see whether you guys value it or not. If you do, then we consider doing it again. Other than that, I'm mostly meeting with professional investors, I have to say, but I'm always very mindful of the smaller investor that represents the majority of our shareholder base. I always try and treat them with respect. If people send me or ask me reasonable questions, politely worded, then I'll try and respond. And so, yeah, I just like to say that I very much appreciate the support that small investors have given this company since the time that I took over as CEO.
That's very good. I've actually just realised.
I'll move on to these couple of the Q&A questions that have been given.
Oh, that's brilliant. Thank you. Yeah.
Of the presentation here. So we've got a question about R&D tax credits. Can I ask if the company has benefited significantly from R&D tax credits this reporting year? I think the answer is yes. I am ashamed to say I do not have the figure to hand, but in the appendix to this presentation, as well as in the full figures that were released last week, you will find a line in our P&L that relates specifically to R&D tax credits. Obviously, the more closer we get to profitability and the more profitable we become, the smaller the tax credit will be. But historically, yes, we've certainly benefited, and we are very careful every year to optimize our tax credit claim. As with many small R&D based companies, it represents an important component of our P&L. Another question here: do I foresee any direct COVID-19 related work? So because there's some overlap between some approaches to treatment of cancer and some approaches to treatment of COVID, some of the companies that we work with, are also involved in COVID. We do not currently have plans to start doing modelling work in the COVID space. As I think reiterated a number of times over the course of this presentation, our expertise, our deep expertise, and what clients really value is the fact that we are really excellent at cancer. So I think, at least for the time being, that will be our main focus. I have another question here. How's the landscape in your industry for M&A, and what sort of company might tempt you to make an offer both in consultancy and personalized medicine? So there seems to be quite an active landscape for M&A in this space at the moment, but it's mainly bigger companies buying, smaller companies our size rather than the other way around. I think the intent of that question was, might we buy something? And yeah, I guess the answer is, never say never. If there was something that was highly complementary in terms of technology or focus, then we might look at that. That's not an active search for us at the moment. On the other hand, looking at it the other way around, there have been a number of modeling companies that have been acquired by other modeling companies or bigger companies over the course of this year. That's something that we keep an eye on, but again, it's not something that I can predict or really comment on. My 100% focus is on growing the top line and the bottom line of this company to create as much value as possible for shareholders. Okay, look, I think that is probably going to be it for now, Mark. So
yes, most definitely. Thank you for that, Jim. I think you've taken most of the questions that have been submitted, both pre and during the event itself. Perhaps as before we wrap up and ask investors to provide feedback, if I just hand back to you for your final comments, that'd be great.
Yes, well, look, it's been a pleasure talking to smaller investors directly. Please do complete the survey that you'll receive sent to you by Investor Meet Company. It will be helpful to understand whether you find this sort of session useful. Apologies that I haven't been able to get to all of your questions. If there are some that I've missed and we think we can answer them, then we will do so and publish that as a Q&A on our website. I believe, Mark, that the actual recording of this presentation and the answers to the questions will be available on the IMC website.
That's correct, sir. That's absolutely correct.
Yeah.
Well, thank you very much indeed for that. That's great. Thank you once again. Could I please ask investors not to close the session? As Jim said, we'll now pass you through to a feedback form where you can give your company your feedback. That would be greatly appreciated if you could do that. Once again, thank you for that. On behalf of PHYSIOMICS, thank you very much indeed for attending today's presentation. That will now conclude today's session. Good morning to you all.